Hey guys, it's a Dividend guy coming at you with another Robinhood portfolio update. Happy Wednesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So today we're going to go over the overall portfolio metrics, the buying power, what I did with the Coca-Cola shares, and why I switched back to AT&T. So we have a lot to cover. Let's jump right in. So for today, we are down about $130. For the week, we are up about 414. 1 month mark, we're up 1100, up about 2.4%. The 3 month mark, we're down 5500, down 10.5%. For the year, we are up 4300, up 10.18%. And then all time, we are up $12,627.47, up 36.33% since April of 2018, so 19, 20, 21, 22. So we have about an 8% return, like 8.5% return year over year, which pretty much matches the market, which I'm okay with. I would like to see, but keep in mind that's given the huge volatility that we had in March with COVID and the other the other issues that we've been having with the election, of course, in November, and then of course with the inflation that just pretty much slammed the market in the past 2-3 months. Yeah. So given that we're up, all time is still phenomenal. Short term, I love to see red because that means that there are current deals. But as you guys can see, today we are red. But, looking out for the week and the month, we're green. 3 months, we're still down. But then all time, we're still in the green. So we're still making money long term, which is really the important part. And keep in mind, guys, I really don't care what this value does or what this value says. What I'm focused on is the passive income that this portfolio generates, and then when I get that dividend income, I'm focused on finding the most compelling deal within the portfolio to put that money in, and what's going to compound the most given time. Given 20 years or wherever, I think is the most compelling spot to put that money at that moment. The lowest price with the highest yield with the most compounding. And I also, when it comes down to say Walgreens v. Aflac or something like that, I look at the growth rate of the dividend over the course of the lifetime of the company. So let's jump right in. Right now I have 68 cents in buying power right now. Realty income sitting right around $69. 141 shares, $9,700 of value. Market cost, or the average cost, is $67.17 for my average cost. Portfolio, about 21% of the portfolio is in realty income. I would love to add more, just not above the average cost. So really close to adding right now, but just not low enough yet. But today we are down $70 total. We are up $241, up 2.5%, with a dividend coming in on Friday of $34.90. Then we've got Altria. I reinvested back into the company, the 6, with the dividend, which equaled out to 6 shares. So that $270 added another 6 shares of Altria, which added $4.20 to my passive income every month, which is awesome. That means that I'm getting $16 more every single year just for that one investment, and of course it will compound as the dividend grows. That's 6 more shares. So last year they boosted the dividend by 4 cents, so that just compounds every single year. But keep in mind, every time that not only do I add dividends, but I also add cash to the portfolio as well, which I plan on doing, I believe, on Friday. I'll add a little bit of cash to the portfolio. But currently, we're sitting right around $13,000 of market value. Average cost is $47.41. 27% of the portfolio is in Altria. Today, we're up $18 total. We are down $1,500, down 10.6%. Then we got Coca-Cola sitting at 2 shares. I did trim the 0.397218 because it was just bothering me. I have OCD, so I couldn't handle the decimal. But right now we have a market value of $125.90. Average cost is $62.69. 0.27% of the portfolio is in Coca-Cola. Today we're at 52 cents. Total we're at 52 because I trimmed and I sold it and bought it back because it was a gift stock, so I just got rid of the position and put it back. So that will adjust given time, but it was just bugging me. Then I switched back to AT&T because, as you guys can see, the stock price fell, and I felt like it was a better value than Cracker Barrel. And the other thing, the other reason that I switched is that I did a lot more research on Cracker Barrel, and I do not like the vulnerability of the business, which I definitely overlooked when I originally bought it. So I just jumped in a little too early, and then when I did more, I listened to the last earnings call and listened to their ideas for strengthening their business through COVID. But they're still being heavily affected. From what management said, they're not at full capacity, and they don't know when they're going to get back to that. So they're sitting at, like, I think they said 65 to 75% of profitability when it comes to their restaurants, and that's the main anchor for their business. So if they're not operating at capacity yet, due to the geographical regions and stuff that they're sitting in, I don't want to be in it long term. I do think that the business has a turnaround option. Like, I see it as a turnaround, but I do like the dividend, but I just don't like the vulnerability that was shown during COVID. Here's the difference, guys, and the reason why I switched back. Because I understood the business, right? I did do research, but I don't like the vulnerability. AT&T did not shut down when COVID hit. To me, it's a more embraceable, or a more stable business, and that's it. And a very good business model too. Like, if you guys have watched any of the videos, you know that my favorite business model is insurance, and the reason for that is people pay their insurance monthly. They have to, otherwise they don't have coverage, right? Well, if you don't pay your cell phone bill, you don't have service. So it's kind of parallel to that in investment strategy where insurance makes sense, because if you don't pay it, you lose it, right? And this, in our time and in this current in this current state of our world, like, you cannot live without your phone, and your phone's pretty much useless without cell phone service. So, and AT&T is the biggest player in that game. So I like the competitive business model of AT&T. That's why I was in it in the first place. I love the impenetrability of this business model, and that's why I wanted to go back, just because I did like Cracker Barrel as an investment. I think it's a great company. I just don't like the vulnerability of the business, and where that falters, AT&T really shined. Even through COVID, they had net added subscribers. They had more internet business. They grew in a time when Cracker Barrel was very vulnerable and losing market share to other restaurants, as well as losing customers and traffic due to COVID. So it's just an invulnerability that they have that AT&T has as a strength. So that's why I wanted to switch back. So AT&T currently, I just bought the shares today. So of course today's return in total is going to be the same. But I have 54 shares now, $1,100 of market value. Average cost is $20.52. 2.3% of the portfolio is in AT&T. Today we're up 17 cents. Same old time, but that will change over time. So, and I like the price. My former price was like $22 or something like that. So I do like AT&T at this price, and I love the business model. I will not be selling it again. But I did get a profit of like $80 from Cracker Barrel, so I just put that back in AT&T. So that's why I went from 52 to 54 shares. It was like a $55 profit. Next, we've got AbbVie at 85 shares, $13,000 of market value. Average cost is right around $87 a share. 27% of the portfolio is in AbbVie. Today we're up 94 bucks. Total, we're back up to $5,600, up past that 75% at $75.95. Then we've got Aflac, which is another one of my down darlings, which is totally fine. Aflac sitting at 180 shares, right around $9,900 of market value. Average cost is right around 61 bucks a share, so a nice buying opportunity here. around 21% of the portfolio is in Aflac. I've already spoken on the insurance business model, but I love Aflac. They're one of the only dividend aristocrats in the insurance business. Chubb also is, but at a valuation standpoint, Aflac just destroys Chubb. Plus, the dividend growth has been a little bit better with Aflac, so that's why I picked them over Chubb. But right now is a huge buying opportunity for me personally in Aflac stock. As you guys can see, about a $5 cost down average opportunity. So when I buy more when I put more money into the portfolio, Aflac will definitely be one of those that I'm looking to add to. Then, of course, we've got Walgreens sitting at around $37. Sorry, about $38. 15 shares. $500 worth of market value. Average cost is $43 a share. 1.2% of the portfolio is in Walgreens. Down $5 today. Total down $83. Down about 13%. So at 43, 39, 41, 42, so about a $5 cost down average on both Aflac and Walgreens. So great. Both of them are at great buying opportunities here. And again, just like I said with the Altria dividend, guys, when I add cash, I will be adding it to AT&T because Altria just paid me. So AT&T is the stock that I'll be buying, because AbbVie I feel is way overpriced, of course. So I won't be adding to AbbVie, but I will be adding to AT&T if I decide to transfer any cash over, and I'll do that on camera so you guys see me buy it and everything. But the next month that follows, I will be adding to either the Aflac or Walgreens position. Hopefully Walgreens, because I do want to get that dollar amount up to a grand. But if Aflac is at a more compelling price or a better price, then I will definitely take Aflac shares. Then, of course, we got Pepsi sitting at 171. I'm not touching it till it hits 155, so definitely not buying that here. Procter & Gamble's at 146, which I wanted at around 135, so I'm not touching it here. And T. Rowe Price actually dropped even more today, so we're about $7 off of the low. Definitely will be buying it here. Berkshire is about $2.80 a share, which is about where it's been for the past few days. Would love to buy Berkshire anywhere below $300, so definitely would be buying Berkshire here. With that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel, that dividend guy, and when you do, hit the bell notification so you guys don't miss any updates. Guys, I've been looking at the statistics. 58% of you guys are not subscribed. So if you're watching anyway, you might as well hit the subscribe button because you're coming back and watching it anyway. So make sure you hit the subscribe button and the bell notification so you get notified when I post a new video, which is every single Monday through Friday. I post every single day now. I'm back on my old schedule. I'm super excited about it. So thank you guys so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.